All right, we have a very interesting technical analysis right here shared by an analyst who correctly predicted XRP to rebound from $1.26. And now he reveals what's coming next. All right, let's say you are trying to navigate a dense, stormy forest in the middle of the night without a map. That is exactly how the cryptocurrency market feels to most people right now. One day we are rocketing toward the moon, and the next day we are sliding down a steep hill. But what if someone handed you a compass that perfectly traced every single turn before it even happened? Well, an analyst on X known as EGRAG Crypto did exactly that. They laid out a step-by-step roadmap for XRP that hit every single target dead on, right up to the recent $1.26 rebound. But the market never stands still. We have officially entered a new zone of extreme uncertainty. The easy money from the recent bottom has been made, and now the real chess match begins. So in this video, we are breaking down what this legendary analyst sees coming next, the critical levels we must protect, and what the structural data actually means for your portfolio. Right. Now, our very first question is, how did XRP trace the prescribed roadmap so perfectly? To understand where we are going, we have to look at the footprints left behind. EGRAG Crypto previously outlined a very specific three-step journey for XRP when it was languishing near its yearly lows at $1.05. It's this one, the red horizontal line right here at the bottom of the chart. The first rule of the plan was simple. XRP absolutely had to hold the line at the $1.14 support zone. Doing so would turn the keys to unlock a retest at $1.19 right here, the yellow line right here. If the bulls managed to clear that hurdle, the doors would fly wide open for a march straight to $1.26, which is this, the green horizontal line. Now, guess what happened? The market respected the exact script like it was reading a teleprompter. The price stabilized at $1.14, marched through $1.19, and expanded past the $1.26 right here. So that's the objective from the top. So out of $1.2996 on June, before hitting a massive concrete wall of selling pressure. So, in my opinion, when I observe this type of structural tracking as a market observer, it tells me that the algorithms and the big money players are heavily respecting established technical boundaries right now. This wasn't a random, chaotic pump driven by a sudden social media trend. It was a highly coordinated, systematic recovery. It proves that despite the noise and the panic we see on our feeds every day, there is a very clear order behind the scenes. It gives me a high level of confidence that the next set of boundaries laid out by these analysts will be just as critical to watch. Now, why is the $1.19 price level the absolute line in the sand right now? So it's this one again, the yellow line. Now that the target has been hit, the market is experiencing what we call a rejection phase. After flirting with the $1.30 mark right here, buying momentum began to fade. EGRAG Crypto points out that this pullback is completely standard behavior of a vertical run and isn't a reason to panic about a total trend reversal. However, we have visually transitioned into a high-stakes defensive phase. The analyst heavily stresses that XRP must keep its head above the $1.19 price level to keep the entire bullish framework alive. As long as the price stays above $1.19, the foundation remains solid. If we slip below it, the market risk is sliding right back down to test $1.14, which would severely fracture the confidence of the buyers. So my take on this $1.19 level is that it acts like a financial dam. As long as the dam holds, the water stays controlled and the energy builds up for the next downstream push. If the dam breaks, the liquidity will wash right back down to the lower floors, trapping a lot of short-term buyers who chase the green candles near $1.29. So as a market observer, I am treating $1.19 as our ultimate line in the sand for the week. If the bulls can defend it during this pullback, it proves they have the staying power to build a higher floor. Now, what hidden buyers are the moving averages revealing? To get a complete view of the battlefield, we also have to look at another perspective shared on X by analyst chart nerd right here. They pointed out that during this recent change upward, XRP can directly into its daily 50-day exponential moving average, which is currently hovering at $1.28 right here. The asset touched it, couldn't find the strength to close above it, and got knocked backward. On the bright side, the daily 20-day exponential moving average near $1.20 right here, the sky blue line right here, right? This is the daily 20, again, this is the daily 20 exponential moving average, which is moving near this $1.20 price level, is currently rising up to act as a safety net. Furthermore, there is a prominent double bottom neckline sitting just below the current price action, which could serve as a major accumulation zone if a deeper pullback occurs. Now, in my view, these moving averages are acting like a ceiling and a floor in a very tight room. The 50-day average at $1.28 is a heavy institutional ceiling that requires serious volume to shatter. The fact that we got rejected there tells me the market isn't quite ready for a runaway train rally just yet. We need to build up more energy. But seeing the 20-day average right here and that double bottom neckline clustering right around the $1.20 area gives me peace of mind. It means even if we dip, there is a dense layer of institutional structural support waiting to absorb the fall. Now, are we currently moving through a wave 4 corrective phase? Now, this is the most exciting part of the structural outlook from Chart Nerd, which is the Elliott wave perspective. They suggest that the current drop from $1.29 is not the end of the show, but rather a classic wave for correction. In wave theory, an asset moves in 5 distinct steps during a major trend. If this thesis is correct, the current pullback is just a temporary pit stop to shake out anxious traders before the market ignites a final wave 5 advance. If the support structures hold their ground, this final wave 5 push has the potential to carry XRP all the way back to revisit the previous local highs around $1.40 before a much larger market correction takes place. Now, I lean heavily into this wave 4 perspective because it aligns perfectly with human psychology in trading. Wave 4 is always designed to make people doubt the rally. It's the phase where the media tells you the asset is dead and retail traders panic sell their positions right back to the whales. So as an observer of these market cycles, I see this as a healthy reset. It clears out the excess leverage and prepares the market for a cleaner, more sustainable push toward the $1.40 milestone. All right. Overall, when we piece the entire puzzle together, the message from the blockchain structure is loud and clear. XRP completed a flawless technical recovery by hitting the exact $1.26 target predicted by the data. Now the market is doing exactly what it is supposed to do, which is cooling off and testing the resolve of the buyers. The short-term path is a battle between the $1.28 institutional ceiling and the $1.19 structural floor, while a drop below $1.19 could temporarily hand control back to the bears and open the door for a retest of the $1 levels. The macro trend points toward a final wave 5 expansion toward $1.40. So as a market observer, the game plan here is to stay disciplined, keep your emotions completely out of the charts, and watch how the price behaves at these critical junctions. The roadmap is right in front of us. We just have to watch how the market executes it. And this finally ends our video. Thank you very much for watching, and see you on the next one. Or you might just as well watch next this recommended video right here.